Hello everybody and welcome. My name is Pete Renzulli. Today is kind of the soft launch of something new that we're going to be starting next week, which we sent a couple of emails about. It's essentially called Q&A Tuesday. Now obviously today is Wednesday, but we threw a topic on the list of something that we receive a lot of emails about from especially new traders, and that's how to actually set up your trading monitor and your screen space for efficiency. We've seen some emails from I trade on a laptop all the way up to I have 8 monitors. And I thought what we'd try and do is give a little bit of clarity of the absolute minimum screen space and what you might need on those screens and what you could possibly use if you have a little bit more screen space. So what I'm essentially going to show you today is a 3-monitor setup. I believe that 3 monitors is more than enough, and maybe one more if you have a virtual chat, the VTF in there or whatever it happens to be as something maybe, then you could put that. We don't quite need the monster space. So I've been trading roughly around 12 years now full-time, so as I said before, I probably had 100 different incarnations of what my screen looked like, every indicator you could possibly believe, and it all boils down to how fast can you look at something, process the necessary information, that's the point there, what's important to you to make a first trading process for a scenario, and then ultimately making a trading decision. So that ultimately obviously flows from you have a trading plan into a game plan, and the stocks you game planned are the ones you're going to look at to trade when the market opens. Now, it's very important. You don't want to be coming up with new ideas after the market opened if you want to earn consistency, and I'm specifically talking about as a new trader. So you want to set up your information flow. For when that bell rings, you already know what stocks you want to be long, which ones you want to be short, and everything else should not matter, because if you plan for 12 hours which stocks you're going to trade on the open, just pull yourself back a little bit if you spot something and it takes you 3 seconds to decide. Now, which one should have more validity? 12 hours of prep, market closes into the next day, or, oh, somebody else called something out. So we're going to try and walk you through a bunch of stuff that I have on my screen now, why I have it on my screen, and then walk from beginner up until somebody who's new. The charting stuff that I'm going to show you, in addition to the execution, again, you don't necessarily need to have everything that I'm going to show you what works for me. And I'm going to walk through why you may or may not have some of the stuff that I have. So today's kind of a soft launch of Q&A Tuesday. This is a topic that a few people emailed in. If you'd like to participate in next Tuesday when we have the official launch, which I believe would be the 6th, I believe, or whatever next Tuesday is, send an email to info@t3live.com and put Q&A Tuesday in the subject line of whatever you'd like for us to discuss. We'll try and have some guest speakers in. Normally the meeting will run about 15 minutes, if that, but we're going to try and create an archive of the most common questions that you guys have, and I think setting up a screen is probably one that's not talked about enough, so we're going to dig into that a little bit now. So let's go to my first screen, which is my execution screen. All right, so what we have here, and we'll work from left to right. In the top left-hand corner, I have what is my order box. Now, these are open orders out in the market right now. This will include limit orders or stop orders that I want to have triggered if I'm looking to get into a position, or as a stop if I'm in an existing position. Now, something that's very important here, there's usually a default on most softwares where you can show all orders you placed for the day or all open orders. I highly recommend you do not show all orders you place for the day, because what happens is if you're a pretty active trader, that box can fill up and open orders can get lost in the mix of the orders that you closed out already or even canceled. So the checkbox you want to have in there is you want to make sure that it is only open orders, the time you put the order in there, obviously the symbol, the amount of shares, and if you get executed, what the price was. Okay, now just below that is the actual position summary. So nothing populates in that box unless you are already in a trade. So we go from all orders out there to now we got executed on a trade. So just below there, you obviously want to know which stock, that's the most important, the price, which will populate for the average price if you built in or tiered into a position, the last price to show exactly where it's printing right now, the position is obviously how many shares you have, plus or minus position in the stock. And actually, I want to touch on these 2 points here. Plus or minus position and plus or minus from the open. This is a little bit of an advanced technique that I think that will benefit you if you really think about it for a little bit. Most people have in their position summary how much they're up dollar amount in the position. So for example, I'll just throw it out there. You buy 1,000 shares and it goes up 10 cents, you're up $100 and it shows $100 on the screen, goes down 10 cents and you might be down $100. Now, I think it's very important from a psychological perspective to trade the structure of the position. So when you're in a trade, most people, if it's only one position, you're living and dying by I'm up, I'm down, I'm up, I'm down. And if you go into the trade and you properly stop loss or develop a scenario for a stop loss, you're like, no, if it gets down to that area, that's where I'm going to kick it out. I'm accepting that the structure of the price action tells me that the trade's right now not working. So what I've done is it's kind of like a little psychological trick where if I'm long and I know I want to risk a quarter for argument's sake, I'd much rather be focusing on, it's up or down within that window of my stop loss without looking at the dollar amount going up or down. So it's kind of a little twist, but it makes a big difference in how you manage a trade because it always brings me right back to I'm not trading the dollar amount. I'm trading where my stop loss is or my profit target, and that's the proper way to look at trades. Now, if we go to the very next column in that same box, you'll see that I have plus or minus from the open. This is a very advanced technique. If you do any mentoring with me, you know that one of my biggest reference points is change from the open today. And essentially what that is, stock opens up, prints at a certain price. That's the opening price for today. So if I want to be a buyer of a stock and I look in my position summary and I'm long, okay, if I'm long and I look over to the right and I see that that stock is negative from the open, that means intraday I bought a stock that's weak intraday from today's open. So I better have a really good reason. I better have developed a great scenario for wanting to be long a stock that is not strong intraday. Now, it could be a different pattern you're trading. It could be a test of yesterday's low or a significant level, one of those kind of things. But I will tell you this. The more often you trade long with stocks that are positive from the open, and again, it's kind of like an alarm that it's in there. Pops in the box, I'm long, and I look over and I'm like, okay, I'm trading with today's price action. I'm doing good. If I'm long and I see the stock is negative from the open, I have to think twice. I'm like, make sure this is a really solid idea and you built a good argument for it because that means you're trading against the intraday buying or selling pressure. Everybody has the long-term charts. You're looking at the longer windows. Today's opening price and where the last price is from the opening price is today's order flow. So if you're long and that's negative from the open, you better have a good reason. If you're long and it's positive from the open, it's a quick sign that says you're on the same side of today's buying pressure. All right, so now if we go back to the bottom left-hand corner, you'll see I have two level 2 boxes. This is a preference. It depends on how much information you could process by yourself. If you've just started out, you're a new trader, I don't think it's necessary to have more than one level 2. If you've been around for a while, you're trading at least 6 months to a year, pop another one in there and it allows you to watch the tape as well as the speed of the action in more than one stock. But if you're new, just focus on one because it can be blinding a little bit when you're seeing so much price changes and you can make more out of what might not be really something happening just because you're watching the prints go on and off. But I will say this, you must learn to watch level 2 because you want to also not only watch how the stock is moving on the charts, but you want to get skilled at recognizing the speed and consistency of the prints in time and sales, which is the actual trades that's going on, which is the right-hand part of that level 2 box in the bottom left-hand corner here, which you can clearly see those are the trades. So it's the actual trades. So you don't only want to pay attention to what's going on in the charts. You want to say, is the stock printing with consistency? Is the stock printing with consistency at the bid or the offer? Get to know the stock a little bit. If the stock's sporadic and not trading at all, you got to have that information right in front of you because you can't go to the chart and say, I want to trade it because it's got a pattern, but look over at level 2 and nobody's trading it but you. You want to think risk management first, and if the stock is liquid and active, you can get involved based on the chart pattern. All right, so now we go over to the next column. All the way on the top, I have what is my messages box. Now, everybody's software is going to be a little bit different, but you want to know if a certain route goes down. You want to know if you have alarms, if they got triggered. You want to know if you have limit orders in there, if they're still out in the market, all of those kind of things. You want to know if NASDAQ went down, those kind of things, and it came back. So it's very, very important to make sure that you're connected, have a message that tells you connected, and if you have any open orders or alarms, you'll see that in that box. It's very important to have that messages box up. Now, if we go just below that, I have this stock watch listed as firm list, and essentially what this box does, everybody knows you look at the major indexes, right? Well, this list has broken down a little bit more to what I believe is a core group that's not quite the Dow, but it's broken down by what I think moves the market on a consistent basis. And what I'm going to, you guys can pause this video and go through each one. I don't need to go through all of them. But what I want to point out here again is the two columns on the right in this middle box. There's change from the open and change from the close. And you'll see here, it's very interesting. There's some stocks that have a mixture where from today's open, as I said before in that other box on the trade, from today's open, for example, look at Google here, the negative 412, that's negative $4.12 when I took this snapshot from the open. So that means intraday they're selling. And, excuse me one second, I'm sorry. So that means right here, the intraday they're selling, because change from the open is this column, but from the previous close, it's positive. So immediately me telling me right now, yeah, there's some buying from yesterday's close, but the intraday action, the intraday order flow is negative. So I want to know, as I said before, which one of those are matching. Those are the ones the higher trade expectations should come in with. So what would I be looking for? Intraday, negative from the open, negative from the previous close. Now I might look at the chart and see, is this in a longer time frame downtrend that I have a really good setup here. So it's a very good, quick visual way of looking at a list of the broad market, your individual, which again, if we go to the right here, individual sectors, I have a list of ETFs. So I have a bunch of stocks that I feel represent the economy and, more importantly, represent a good tradable opportunity. All of these stocks are tradable. To the right, then I have a list of ETFs. Now, how would I use this? I'm not really watching the ETF list like a hawk, but what I am watching from the ETF list is I'm looking to see if all of them are green or all of them are red. And what's that going to do for me as a trader? It's going to increase or decrease my trade expectation. If every ETF I'm looking at is negative from the open and negative from the close, I want to be aggressively short. That's going to affect my trade expectation. So a bunch of individual stocks, positive or negative from the open, that I feel represents a decent portion of what moves the market. Then I have a list of ETFs that I feel does the same thing. So you see what we're doing here? You get a quick, good visual glance at the market to see, do I have a solid, everybody leaning on one side of the boat? Is it really obvious to me with a very quick glance, is it really obvious buyers or sellers are doing something right now? Okay, now you take it even a step further. If you use the same software as I'm using here, which is Lightspeed, you will actually see them flashing new highs and new lows. So if you get all green in most of the columns and throughout various sectors, that means a lot of money is flowing in there, and it'll flash, the whole column will flash red or green depending if it's making a new high or a new low. So essentially what I'm getting across here is I'm not really staring at all of these like a hawk, but what they are telling me is, what does my odometer look like? Like, how fast is the market pumping right now? Is there a really solid bias? So if you see different industries and different sectors doing the same thing, whether it's red or green, and from the open and from today, you get a really good idea of, you know what, I should only be looking at that side of the market. Screw those mediocre trades on the other side. Let me focus where the money is. And by the same token, when you start to see a lot of mixture like we actually happen to have in this picture, that tells you that you have to get a little bit more stock specific, because big picture is not that obvious, which takes me to the bottom right-hand corner now, where I have the list down here where it says longs and short sales. So essentially what I'm doing is, we're coming into the day, these are the stocks I game plan long, this list would be short. So I'm looking to trade these first. So I'm looking for positive from the open, positive from the close, and I'm looking for confirmation from the other two boxes. So without even looking at charts, I have my game plan defined by my strategy of I want to be long or short. So the first short stocks I'd be looking at, I'd want them to be negative from the open and negative from the close. And then the best candidates would be these guys. One other very advanced technique that's very important. See this here? DOW, it's negative 4 cents from the open. You want to start to track stocks that go from negative to positive, positive to negative. Just make a note of them, set an alarm, be really quick. If something's negative 10 cents, set an alarm for 5 cents over that positive number so you know it turned. You want to be alerted. Intraday buying pressure for a stock you already want it to be long. Again, I'm going through this a little quick. You can pause the tape, go back. The important point here is this. Everything on your screen should be built on, I have a game plan coming into the day. When the market opens, how do I process the right information to help me with my trade expectation up or down? So I've done this with just those two stock watches. All of these stocks that represent various parts of the economy, all of these ETFs that represent a little bit broader. And then you also see I had the spiders, the Qs, the diamonds, UUP, and the FXC. So I had the dollar and the euro on there as well. So you get a pretty good grasp without going crazy all over the place. It's right in front of me all the time, but more importantly, how to use it. Does it help me make a decision? Does it help me increase or decrease? So those things help me increase or decrease my expectation, a lot of money flying into the market or out of the market at the same time, or a mixed picture. So then when I go down to the lower picture of the stocks that I game planned, I already know before I look to make a trade what my expectation for follow through is based on the big picture. All right, so we'll go to the next one, which is actually going to be the various charts that I have set up. All right, so the first window that we're looking at right now is a one monitor setup that I have that represents the NASDAQ. You could use the composite or you can use the Qs, whichever one you feel comfortable. So we'll actually start on the bottom here. These are all 15-minute charts. So what I want to see is I want to see 15 minutes, 2 days worth of price action when I'm just trading intraday or maybe over 2 days at the most. So I'm specifically talking about a little shorter term trading here. So what we have here is we have the Dow, the NASDAQ, and the spiders on a 15-minute chart. So I get a pretty good idea of are all three indices doing the same thing. So you can clearly see here intraday, boom, now we're adding to our argument very quickly without, again, I'm not studying, I'm not watching every single candlestick in this case. I want a trend to be screaming at me. And in this case, if all three of them are doing the same, what does this tell you immediately? This is a very good day to be looking for sell shorts and letting the longs go. So a very quick glance over a 2-day window into today's window. Now we go to the top left-hand corner. Now we have the top left is a chart of the VIX volatility index on a 5-minute candlestick chart. Again, we're not going to get into a big lesson, but trending up means there's fear in the market. That's a good day to short, and you can see that's coincided with the market all across the bottom. To the right of that is the tick, New York Stock Exchange tick. Now, there's a couple of different tick indicators. There's New York, there's NASDAQ. I just stick with the New York. You don't have to use overkill. We're not going to get into a whole discussion. I just want to show what's on the screen. And then what's interesting here, all the way on the top right-hand corner, I have a 5-minute chart of the spiders. So I watch the spiders a lot from a technical perspective because 500 stocks to me, that gives me a pretty good idea of the broad base. So for the spiders, I have 15-minute and then a 5-minute just to zoom in a little bit more to get a better clue what's going on. So across the bottom on one monitor, NASDAQ, Dow, and the spiders, 15-minute chart over 2 days. Top left-hand corner, I want to see the intraday trend of the VIX to tell me if there's fear or greed coming into the market. Next to that, I have the ticks, New York Stock Exchange ticks, and to the right of that is just a little bit more zoomed in of the spiders, just to get a little bit more fine-tuned on what's actually going on this chart here. Okay? And last but not least, we are going to go to what I actually have on my screen for watching stocks. Very, very important here that you recognize that this is what I use. It doesn't have to be perfectly exactly what you guys use. Some people have stochastic, Bollinger Bands, everything you could possibly think. I went through that. I did exactly that. I've just found that with the right information, it doesn't need to be too complicated. But the key there, the right information. The right information for you to make a decision. So I'll point out what we have on the screen here is we have a daily, a 65-minute. So on the top left-hand corner, we have a daily, 65 over about 5 days. Again, that same 15-minute chart over a couple of days, and then a 5-minute chart to zoom in. So essentially what's going on is I use the higher time frames to set up my trades, lower time frames to tell me what's going on intraday. Very, very simple. I do have 2 moving averages on here as we teach in the Active Trader course. I have the 8 and the 21 period simple moving averages. We can get into a 4-hour discussion about whether simple or exponential. In my opinion, if it's average in the word, you want the average, so that's why I keep it simple. Exponential moves a little faster. That's not the average anymore. That's just it's just the way I look at it. You guys can do whatever you want. So hope this helped you to set up your minimum screen. You don't need a lot on the charts, candlestick, moving average, and volume. That's all I got over a couple of days to get an idea of what's going on over a couple of days. Fast information to make a decision, and then you use the charts to help fine-tune your entries and exits. So you take it from there. Hope this helped. And again, if you want to participate in next week's Q&A Tuesday, send an email to info@t3live.com. Put Q&A Tuesday in the subject line, and maybe you'll make it into next week. Have a great day, everybody.